Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Thanks for listening. February 24th, 2026. The markets are clawing back some of their losses from yesterday. The S&P 500's up 0.5%. It's at 68.76. The Dow Jones Industrial Average up 0.75%, sitting up 354 points. The NASDAQ up 203 points, up almost 1%, up 90 percentage points. Not 90 percentage points, 90 basis points. Russell 2000 up 26, up 1%. There's a 1%er. Let's take a look at Bitcoin, down 1,400, sitting at 64,032, down 50% from its all-time high. 10-year Treasury sits at 4.03%. Gold is a little bit weaker today, down 1.1% to 51.68. Silver, on the other hand, is up 1.3%. So the commodity boom is still booming. Brent crude sits flat for the day. Maybe that'll change tonight as the president is set to address the nation. The over-under is an hour and a half with conversations tomorrow. The over-under, probably about 3 hours of your time will be spent. Talk to friends and family about what you heard from the president the night before. Trump's going to make a new case for tariffs as even allies are growing skeptical. AMD stock is jumping today on massive AI chip deal with Meta. AMD's up 7%. Warner Brothers has pushed their Paramount offer up to $32 a share. I think Netflix should walk and see that stock go up considerably back to $100 a share. Tesla Europe sales tumble 17% in January as China's BYD soars. Goldman Sachs says AI-fueled layoffs could raise unemployment rate in 2026. That's this year. Wow. I like Jamie Dimon. When you disagree with Jamie Dimon, you better have a damn good reason to disagree with him because he protects his comments. So Jamie Dimon's talking today. His quote was, "I see a couple of people doing some dumb things." He talks about 05, 06, and 07, the global financial crisis. The rising tide lifting all boats. Everyone was making a lot of money. People leveraging to the hilt. The sky was the limit. He said, my own view is people are getting a little comfortable that this is real, that these high asset prices and high volumes, and that we won't have any kind of problem whatsoever. So we're quite cautious about that. I like Dimon. He's due to retire soon. I like that he is a voice of reason. Even if you don't agree with him, and even if he's wrong for longer periods of time, he's still making you think about the risk in your portfolio. Now, again, sometimes he's doing it to step on his competitors. I get that. And it's probably the biggest criticism you can have on him is how fair is he across the board. Let's take a quick look at the markets. We're getting a modest rebound across tech and consumer discretionary names after yesterday's weakness. There's still a lot of lingering tariff uncertainty. There's some sustained pressure across the financial sector. So financials are weak today. Energy, healthcare, and communication services. Domino's Pizza up 3%. Home Depot up 3%. Companies responding to earnings in a positive manner. The market is continuing with a lot of headline risk right now. Tariff headlines, AI displacement headlines, and private credit concerns. AMD is up big on that news of a big deal with Meta Platforms. It just made a big deal with NVIDIA maybe 2 or 3 business days ago. FedEx has filed a lawsuit to get a refund on tariffs. Bitcoin prices continue to slide. It's going to be a big, long speech tonight. Home Depot has provided some ballast for the Dow Jones Industrial Average. They beat earnings expectations for the first time in over a year. The U.S. men's hockey team is going to be at the State of the Union address tonight. The women decided to decline the offer. Waymo has said they're opening a robo-taxi service to select riders in Houston, Dallas, San Antonio, and Orlando. Multi-city expansion. Waymo is now operating its service in 10 U.S. cities, extending its lead in North American driverless ride-hailing markets. Waymo is working to lock in loyal riders before rivals Tesla, Zoox, which is owned by Amazon, and startups like Wabi and Nuro can establish their own widely available robotaxi network. Select riders in 4 cities who have downloaded the company's app will receive an invitation to take their first local rides. Waymo wants to invite more passengers on a rolling basis and make the service generally available in the markets by the end of 2026. Waymo is going to use its 5th generation driver system in its Jaguar I-Pace sedans. Earlier this month, Waymo began offering employees and their guests rides in Waymo's 6th generation driver system, which is built on Geely's base model Ojai electric cars in California. So there will no longer be Jaguars. That'll make them more cost effective. Waymo is already providing over 400,000 paid trips per week across the United States. They've surpassed 20 million trips over the lifetime of its service. Some other stocks in the news today. Chinese EV maker NIO provided 1 million battery swaps in China in less than a week. That's pretty cool. Instead of charging them, the company does it for you. You drive into a station and they do a swap in under 3 minutes. Analysts slashed their price targets for Salesforce ahead of tomorrow's earnings report. That's going to be a big one. NVIDIA is going to be big tomorrow after the market, but Salesforce, I think, just as much, because the price of the company has fallen significantly. It's now down to $184 a share. There's growing fears the AI workforce, including Anthropic's Cowork, could threaten part of its core business. Morgan Stanley cut its price target 30% to $287, down from $398. Jefferies slashed its forecast 33% from $375 to $250. Barclays reduced its price target from $338 to $265. And Evercore ISI went from $340 down to $260. Wedbush securities analyst Dan Ives offered a different view, adding Salesforce to his list of its top 30 AI companies and calling the stock a core participant in the AI revolution. He described the recent sell-off as overblown. I think it's going to be fun to watch tomorrow's earnings. So get ready for a wild Thursday between NVIDIA and Salesforce. Salesforce obviously representing in this corner the software stocks who have been clobbered since October. Anthropic has followed OpenAI in rolling out agentic tools for enterprise just a day after OpenAI rolled out its agentic platform. Anthropic announced its own, built from existing pieces of Anthropic tech that have already been previewed. The new platform essentially ties together plugins that can be tailored by enterprise customers into a Claude Cowork. Claude Cowork, with these new connectors, ties into third-party platforms like Salesforce, their Slack, Google's apps, LegalZoom, DocuSign, and others. While OpenAI was releasing consumer apps like Sora, Anthropic was busy improving Claude's ability to make spreadsheets and PowerPoint presentations, the boring but essential tools of our workplace. Taiwan Semiconductor trades near a record high as Apple plans to purchase well over 100 million chips from the Arizona facility this year. Apple's up roughly 3% on this news. They said they're going to invest $600 billion to expand in the U.S. over 4 years. They want to reduce their reliance on overseas suppliers and avoid tariffs. We're getting more details now on what this involves. It includes expanding AI server production and moving future production of suddenly trendy Mac Minis to Houston. It also involves the purchase of well over 100 million chips from Taiwan Semiconductor's Arizona facility this year. That's a significant increase from 2025. Apple's global head of procurement said, quote, "We're buying as much of the output of this fab as we can." Apple has long been one of Taiwan Semiconductor's largest customers, even as the iPhone maker shifted to designing its own processors in-house, chips that Taiwan Semiconductor overwhelmingly manufactures for the world. Shares of Taiwan Semiconductor up 3%, near record highs in early trading. It was one of my stocks of the year 2 years ago. The infrastructure, the semiconductor equipment manufacturers, and the semiconductors themselves, kind of phase one. Then the building of the data AI centers, phase two. That's where the vertives come into play, if you will. Amazon announced plans to spend $12 billion on its first data center campuses in Louisiana. Their quote was, "We're creating hundreds of high-paying jobs and making substantial investments in local infrastructure." So Amazon's doing it. Meta's doing it. Amazon says the project will require 1,500 construction workers and 540 full-time employees to operate the facilities. As they've noted, for projects that cost this much, the long-term employment footprint is relatively small. With a lot of electricity consumption, tech companies in the United States have recently been kind of put on notice by the White House saying, you're going to have to upgrade the grid and make sure the costs don't get passed on to local ratepayers. Mortgage rates fell below 6% yesterday, the lowest level since 2022. The 30-year fixed-rate mortgage sits at 5.99%, down from 6.89% a year earlier. Mortgage rates, will they get into that lower range of 5%? 5.99 is relatively 6. Experts believe the current level is more durable. Experts believe this will lead to a cascade of mortgage refinancings. Mortgage Bankers Association reported that applications to refinance home loans are up 130% compared to February of 2025. Yesterday, we had the fallout of the Citrini paper. They've made some massive, crazy good and crazy bad calls on technology over the last 5 years. With companies like Salesforce seeing their price targets slashed today after the stocks have fallen, there'll be less of a conversation about overvaluation. ServiceNow is doing an aggressive buyback. Big insider buying. Adobe, which is being kind of pushed out here. It's pretty fascinating to watch. Adobe makes some high-end software for web creation, websites, annual reports. You get the idea. A lot of that can be done via the coding of Anthropic. AMD is soaring today after striking an AI chip deal with Meta valued at over $100 billion. Meta is going to deploy 6 gigawatts of AI infrastructure. That's multiple generations of AMD AI chips. AMD has said that each gigawatt is equivalent to several tens of billions of dollars of sales, making the value of this pact in excess of $100 billion. Meta is going to receive warrants to buy as many as 160 million shares. That's roughly 10% of AMD's current total shares outstanding. For a penny each, as certain milestones are hit pertaining to the amount of gigawatts shipped. Meta achieving key technical and commercial milestones. AMD share price, they're getting closer and closer together. The GPUs for warrants framework is similar to the one that AMD brokered with OpenAI last year. Meta CEO Mark Zuckerberg has a voracious appetite for AI computing. Just last week, Meta unveiled a multi-year, multi-generational strategic partnership with NVIDIA. I just want NVIDIA to report numbers so we can have something to kind of put a stake in the ground and move on from. Home Depot up over 2% today, delivered its first quarterly beat in 4 quarters. Not a lot of job cuts announced. I guess it's positive considering we expect the Federal Reserve to cut interest rates later this year. So Home Depot and Lowe's, Williams-Sonoma should get a bit of a tailwind from that. JP Morgan upgraded Domino's Pizza to a buy from hold. Price target was lowered slightly from 460 to 450. They're steadily taking share from Pizza Hut and Papa John's. I like the stock for the long-term patient investor who doesn't want to hit a home run. Remember how we talked about Salesforce price target getting cut? TD Cowen just cut CrowdStrike price target to 480 from 580, reflecting the recent plunge. TD Cowen analyst sees CrowdStrike delivering largely inline numbers when it reports earnings next week. Can cybersecurity really be replaced by AI? Deutsche Bank downgraded Blue Owl Capital to hold from buy. This is the private lending company that a lot of people have questions about. Private credit is something you tie yourself up to for years. It used to be really only product that like massive college endowments would play with. Teachers' retirement unions, because they had the time frame to let the assets sit and mature. Price target's been cut to $10. Analysts are cooling on the alternative manager thesis. Any of these companies that have exposure to enterprise software, lending them money, it's getting shot first, with questions coming second. I have a big event coming up March 11th, 6:30 to 8:30. It's a wealth preservation retirement planning event with Stephanie Richman. You can sign up for the event at robblackshow.com. It's at the Lafayette Library, 6:30 to 8:30, Wednesday, March 11th. It's one of my 2 events going to be live. That's going to be tied towards wealth preservation, retirement planning. If you're heading towards retirement, this is ideal for you. You'll get a lot of your questions answered. What are you doing right? What are you doing wrong? What are you forgetting about? Sign up at robblackshow.com. I've got another couple segments. Stay with me.
These days, retirement planning is more complicated than ever. So set aside Wednesday evening, March 11th, and get ready to learn some strategies for navigating wealth in uncertain times from Stephanie Richman, Rob Black, and Nathan Rogers. This event will focus on retirement income, tax strategies, estate planning, and tax planning. If you're at or near retirement with at least $500K in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves, Social Security strategies, and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. That's Wednesday, March 11th, 6:30 p.m. at the Lafayette Library in Lafayette. Space is limited, so sign up today at robblackshow.com. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
It's going to be a wild State of the Union address tonight, as Trump really has to deliver quite a message to help the Republicans with the midterm elections, as his popularity is at a low. Typically speaking, this should be the Democrats' time to win back Congress, and thus make his agenda very lame duck in the second half of his term. S&P 500 is getting a little bit stronger this morning, now up 80 basis points. It continues to climb. Again, not something that I get excited by. Hopefully you don't either on any day-to-day. I'm excited to hear the State of the Union and see how the markets react, especially the Treasury market. I'm excited to hear NVIDIA and Salesforce report numbers Wednesday after the close. I do own a large position in NVIDIA, so that's important. I did a story yesterday for you about how their market cap versus their PE versus their growth rate is looking pretty attractive. They've got a very good growth rate, and compared to their PE, so that's called a PEG ratio, PEG ratio. But also their overall PE is about 24, 25 times earnings right now. So that could, materially go 2 or 3 points lower with a good quarter. And they should have a good quarter because they're sold out. Plus, they probably added back some business in China, which should add a little bit of upside. So the S&P 500 is up 54 points right now, up 0.8%, sitting at 68.92. It's pretty close to its all-time high. The Dow Jones Industrial Average is up 85 basis points, up 416, sitting at 49,220. The NASDAQ as well, up 1.1%. The Russell 2000 up 1%. 10-year Treasury sits at 4.03 when it dips below 4. That's one of those lines in the sand where if you ask me at a bar during lunch, should I buy stocks or bonds or real estate? I'd say stocks under 4%. If you get it down to 3.5%, stocks. If you get it down to under 3%, stocks. Over 3.5 to 4%, that's when you start thinking about moving to bonds or cash equivalents. So there's trillions of dollars on the sideline right now watching this. Gold is pulled back after a 4-day ascent as Asian traders return to the markets. Judge has ruled Tesla must face a lawsuit alleging anti-American hiring bias. Haven't even heard about that one. Warner Brothers is weighing Paramount's offer as the bidding war has escalated, and it should be the last and final bid. I believe it was Monday, last night at midnight. This is kind of fun. Wealthy spouses are hiding crypto assets in divorce cases. Man, you once used to love someone. Don't go bad on them during the divorce. That's just my opinion. So, I've always tried to play breakups that way. I'm not the smartest person. You know who's pretty smart right now is Generation Z. They're changing the sparkle economy. A diamond is forever, according to De Beers. De Beers made that phrase famous in the 1980s. I believe it was the 80s. It could have been the 1990s. But they just had their valuation cut aggressively. They're trying to be sold off. They're the largest diamond miner in the world. Demand for mining diamonds is weakened globally. China's luxury slowdown has hit high-end spending. Younger buyers, especially Generation Z, and this is why I'm calling them smart, they're increasingly choosing lab-grown diamonds over mine stones. A lab-grown diamond is going to be 30 to 70% cheaper. The typical engagement ring for a lab-grown diamond is $5,188. The typical engagement ring for a natural diamond, $10,760. They both sparkle the same. They're identical chemically to each other. You can actually get a fancy color diamond. It's going to run you about $23,000. So the sparkle is gone. It's just being manufactured differently. And I'm all for young people making this move. I think it's a smart one. And socially, it seems to be better. You remember the thing about blood diamonds? I don't know much about that, so I'm not going to speak on it because I'll sound stupid, but you get the idea. Goldman Sachs raised its Quanta Services price target to $685 from $495. Quanta builds and repairs critical infrastructure. They are seeing benefits from data center expansion. Their earnings call was fantastic. Goldman Sachs is expecting the earnings per share to grow at 17 to 18% CAGR, compounded annual growth rate between 2025 and 2030. Qualcomm got an upgrade from a sell to hold, $150 price target. Wells Fargo is saying the company's data center strategy could drive positive investor sentiment. Qualcomm shares have underperformed the chip sector on a year-to-date, 1 year, 3 year, and 5 year basis. Most obvious, the company is not a data center AI beneficiary, at least not yet. Year-to-date, the share price underperformance has been fueled by a perfect storm of circumstances. Memory chips won't remain in short supply forever. Accordingly, the smartphone market should recover. By this time next year, Qualcomm's sales to Samsung will comp evenly at a 75% share versus a step down from 100% share as the case is this year. Qualcomm's chip shipments to Apple will be on pace to be less than 10% of Qualcomm's total revenue. You might remember that there's a licensing issue tied towards modems between Apple and Qualcomm. Apple's now doing their own internal modems. They're slowly, through product, rolling that out. So Qualcomm gets a nice upgrade today, but can't get all excited by that, can you? SanDisk is sliding on a Citron short announcement. SanDisk is down today just 2%. It's up over the last year 1,200%. It was spun off from Western Digital exactly a year ago. Citron Research, they're a well-known, I would say, poop stirrer or chip stirrer. How can I say it without saying it? Their analyst is saying that SanDisk has benefited from the parabolic rise and increase in memory chips. It's only a matter of time before the giant contract chip manufacturers like Samsung Electronics and Taiwan Semiconductor turn on the taps. The market is pricing SanDisk like it's pricing NVIDIA. There's one problem. NVIDIA has the moat. SanDisk sells a commodity. We've seen this movie before in 2008, 2012, 2018. It's never different this time. Memory is a cycle, and a cycle's peak. That's some pretty hardcore stuff. Citron is short on SanDisk, so they're benefiting their position by saying negative things about it. One of the things that they said is they don't ring a bell at the top. We don't need Anthropic to announce that they're making flash memory. Samsung is already the 800-pound gorilla in the industry. Wow. SanDisk is up 150% this year, up 1,200% over the past year. So 52 weeks versus 2 months. 150% in 2 months. It is ripe for criticism because it is a commodity. And I'll ask you this, is what flash memory is in your computer right now? What flash memory is in your phone? You probably don't know. Anthropic updated its Claude Cowork tool, built to give the average office worker a productivity boost. This seems to be working with names in the software industry rather than against them. Beleaguered business stocks like IBM, Salesforce, ServiceNow, and Oracle got a lift this morning when Anthropic said these new plugins will allow integrations with companies in a range of industries. These companies have been battered for weeks, with each of the aforementioned companies losing anywhere between 20 to 30% of their value in the past month. One of the things that you're going to notice about this is these AI assistants getting plugins to things like Google Drive, Gmail, DocuSign, FactSet. They can deploy customizable plugins across domains like financial analysis, engineering, and human resources that encode institutional knowledge and workflows. Investors have been on edge with the billions of dollars of market cap lost. Anthropic's playing nice today, but a couple days ago they weren't playing nice. And that's been the narrative recently. Artificial intelligence went from Wall Street's favorite theme to a big risk in the last, I'd say, since October of 2025, so almost 6 months. Are we in a historic bubble? Is it even worse than that? An existential, bubble to threat to jobs in America. That report yesterday from Citrini Research laid out a bear case for the AI-dominated economy, catalyzing a sell-off in legacy software and payment stocks. You saw ServiceNow, DoorDash, MasterCard, Visa, and Palo all lower. The MasterCard and Visa was interesting because it's tied towards the idea that we're going to be laying off employees, white-collar employees who sometimes did business trips. So MasterCard and Visa, who make a ton of money on business travel transactions, might see that go away. We've seen some sell-offs in late 2025, second half of 2025. Now we're seeing the apocalypse outcome on some software companies. If AI agents can write code, generate content, reconcile payments, manage marketplaces, transact with other agents, what will the human middleman do? Markets rarely move in straight lines, and even the best of forecasts are often wrong. AI adoption could take longer than expected. What else could go wrong? Regulators could intervene and slow down Silicon Valley. Incumbents could figure out how to integrate AI without becoming obsolete. The question on valuations is a fair one. Do you feel more comfortable buying a company at 20 times earnings or 30 times earnings or 40 times earnings? Depends on the growth rate, probably, for you. But even the most common of us all will say that you probably don't want to pay double the valuation ever for anything. Microsoft has a new semiconductor. It's an AI chip that shows competitive performance, supporting Azure compute margins potential. This is a knock in theory against NVIDIA and AMD. Probably a big win for Broadcom, as they're making the semiconductors for a lot of these hybrid chips, if you will. Whether it be Amazon's Trainium and Google's TPUs, Microsoft's getting in that market as well. Monster Beverage price target was raised to $85 at Evercore ISI. The analyst Robert Odinson added, Monster remains the best large cap global growth beverage story in our coverage. Monster is less compelling than the pre-November 2025 when it traded below 70. It's currently at 83. So they said as it's gone up, we like the story, just not as much as we did back in November of 2025. Coca-Cola, Pepsi, Budweiser, they're considerably a step behind Monster as far as stock performance goes. Monster has greater exposure to the hike in MWP, which may give some investors pause. So what I like about this call is something along the lines of, it makes you think about aluminum prices. It makes you think about, do you like Monster at $80 a share, or is $70 more attractive? Both my kids love energy drinks. and they consume one too many. I let them have one a day, and I think that's one too many. You can find me online at robblackshow.com. I have an afternoon podcast coming up. You can hear it where you find podcasts. The live stream is on kdow.biz at 5 p.m. Pacific. You can find me online at robblackshow.com. That's robblackshow.com. We'll take a break here. We'll be right back. But let's remember Lafayette Library coming up March 11th, 6:30 to 8:30. Wealth preservation and retirement planning. Stephanie Richman, Nathan Rogers, myself, talking markets, talking are you ready for retirement? What are you doing right? What are you doing wrong? Sign up for that event at robblackshow.com.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement income, tax strategies, estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.
Bitcoin fell under 65,000. It's had a rough 5 months. I'm not here to pick on it in any way, shape, or form. I'm saying maybe you could think about what's in your portfolio and is it doing what you want it to? Bitcoin ETFs are hemorrhaging billions. Waiting a crypto turnaround, what should you watch for? In the past, how much has Bitcoin fallen from its high? 75%. We're not there yet. Investors have roughly pulled out $4.3 billion out of spot Bitcoin ETFs in the past 5 weeks. Bitcoin has been unable to catch a break recently. It fell below 90,000, almost straight to 65,000, which is the range it's been in recently. The NASDAQ got off to a really hot start in January that it couldn't hold in February. The NASDAQ had a great 23, 24, and 25, not a 2022. But it also had a great 2021, 2020, and 2019. Like, whoa, that's 6 out of 7 years. So I'm not surprised by the recent underperformance. Bitcoin seems to be moving with the NASDAQ and with AI stocks. NVIDIA reports Wednesday after the market closes. There's a State of the Union address Tuesday evening, which I think is going to be intense. And why do I say that? It's because the Supreme Court sits in the front row. And Donald Trump called 3 of them China puppets on Friday. Said that he has 3 heroes on the Supreme Court, even though there's 6 conservative justices. I think that's awkward. It would almost be like if, I had a family reunion and I said, I like half of my family that's here. So there's that. It's going to be an interesting State of the Union speech that I used to watch these religiously. I felt it was my American duty to. I don't think I've really watched one aggressively. But we've had some fireworks come out of them recently. Republicans, cheering and whooping and hollering and trying to make Biden look bad, which I think age did for him. AI is repricing the future. That's one of the themes we have today on the stock markets. Tech valuations may not be done falling. This is whoa. when you have companies that have PEs between 30 and 60, those are some high flyers that historically we don't get in that ballpark all too often. Speaking of which, NVIDIA's got a PE currently of about 25 times. They're going to have a nice quarter, and they're going to make that PE look smaller. And it's probably a good trade, maybe a long-term accumulate. The recent sell-off in many tech-related stocks has many people on Wall Street worrying. AI capabilities have improved by leaps and bounds in the recent weeks, months, and years, to the point that investors suddenly are fearing that it's going to be able to replace large swaths of tech and other industries. There was a research piece that went out, and a lot of people are looking at it, quoting it. I think the underlying theme is that AI is repricing the future. What are we willing to pay? 10 times earnings, 15 times earnings, 20 times earnings? Chinese open source models are already capturing 47% of the combined AI market share, globally at 80 to 90% lower than the cost of U.S. frontier models. Anthropic's gross margins are forecast to fall to 40% even as it wins the inference race. Oracle faces a shareholder lawsuit for committing to large levels of compute capex against revenue projections that may never materialize. So NVIDIA is on the hook for billions of dollars invested in OpenAI. I wish that weren't the case. I try to write down 5 to 10 things that I like about a company and 5 to 10 things that I don't like about a company. And probably not any single one of them is a deal breaker, but it's a negative. The AI fear, it's real out there. You've seen Uber stock come down aggressively as people are starting to think, Waymo looks like a winner and Tesla kind of looks like a winner. Why do we need Uber to do this? A Substack posting is going aggressively on artificial intelligence and trying to stir social media right now. I'm not sure I'd make an investment decision based on a Substack post. Citrini Research, an independent publisher, posted an article Sunday, Imagine a 2028, in which AI advancements have triggered mass white-collar layoffs. Citrini, they do some pretty good future research that it's well read by Wall Street and the tech Illuminati, if you will. When I say Illuminati, I'm not saying it seriously. I'm saying it as I think you know what I'm talking about. But if not, it's the tech bro. It's the, I think you know what I'm putting down. DoorDash, will they be put out of business and or not? When competitors could use coding agents to easily launch a delivery app, will CrowdStrike be put out of business? When Anthropic could be used to come up with a cybersecurity system that's similar to what's out there in theory, maybe not reality, but in theory, people are shooting first and asking questions second. CrowdStrike has plummeted. A new AI tool is crushing cybersecurity stocks. Let's talk about this and Palo Alto Networks as well as Zscaler. They plummeted after Anthropic unveiled a security tool built into its flagship artificial intelligence model. The new capability, Claude Code Security, scans code bases for vulnerabilities and suggests software patches for humans to reveal. Anthropic is releasing the tool as a limited research preview for Claude Enterprise and for group customers. Wow. This has got the industry in tizzy. I want to buy CrowdStrike. I haven't pulled the trigger on it. And when I say I want to buy CrowdStrike is I like accumulating positions in high quality names that have fallen and become disconnected. So Zscaler, SailPoint, JFrog, Palo Alto Networks, all lower. A CrowdStrike spokesperson talked about an article in Barron's. where CEO George Kurtz published on Sunday about Claude. His quote was, AI doesn't eliminate the need for security, it increases it. If you want to build AI, you need GPUs. If you want to deploy AI, you need security. The other companies in the list really haven't replied, but Zscaler, SailPoint, JFrog, Palo Alto Networks, CrowdStrike are all getting hit by fear of being disrupted, as has the investment management industry. A lot of industries are getting shot first right now. Ask questions later. I do like the fact that there's a security company called JFrog. I was driving around yesterday and my son saw some Trump protesters, no Kings people. I goes, Dad, why is someone dressed as a frog? I'm like, I don't know, but maybe it's the peace frogs. I don't know. He goes, what are the peace frogs? I'm like, I'm going to be quiet right there because I don't really want to get into that because I don't really know what a peace frog is. But that's a thing. Amazon's trying to reset as a stock. There's a technical bull case on the stock right now. Bulk of earnings season is behind us. It's worth assessing how the highest profile large cap stocks have behaved and gotten beaten up recently. Amazon's daily chart is beginning to show several constructive features. Momentum indicators are also improving materially. The relative strength index is pushing the stock out of the oversold territory. That's a reset for some on a technical basis. The constructive development is last week's bullish engulfing candle formation, which is impossible to explain on radio broadcast. But again, the market giveth and the market taketh away. And what we're seeing right now with security stocks, CrowdStrike, Palo Alto Networks, JFrog, Zscaler, doesn't have me excited. The fact that we are now referring to on financial media like CNBC and others, we are now referring to, how do we put this? Instead of the Magnificent Seven, the Lag Seven. Maybe you'd call them the Sag Seven. They're just not rocking and rolling. Again, I see some trade opportunities there. I do not really see the case for a rock and roll. I'm not giving up on AI. I've just changed how I look at risk in the last 6 to 9 months. And I hope you do too on some levels. Novo Nordisk stock is getting murder-related. That's good news for Eli Lilly. 2.5 years ago, when I first started doing research on GLP-1s, everything that I was researching pointed to the fact that Eli Lilly is just better than Novo Nordisk. But the Novo Nordisk had a head start on getting drugs to the market. I think long-term, doctors are going to feel more comfortable with Eli Lilly. Novo said today that a trial evaluating the efficacy of its experimental obesity treatment called CagriSema failed to meet its primary endpoint of showing more effective weight loss than Eli Lilly's tirzepatide, which is sold under the brand names Mounjaro and for diabetes, as well as Zepbound for weight management. Now, this is what's nuts about Wall Street. People treated with CagriSema, again, that's Novo Nordisk, they achieved 23% weight loss after 84 weeks. That compares with 25.5% for people taking tirzepatide. Now, a lot of this is going to come down to doctors and how do you respond to the drug interactions with your body, and do you have like explosive diarrhea with one and not the other? And doctors will start figuring this all out and say, okay, where can we go? And I know you're saying, you just brought up Domino's Pizza. Now you're using exploding diarrhea. Ow. Yes. And they are linked in my head. So CagriSema is a fixed dose combination of two medications, which mimics the natural hormone amylin and semaglutide, the active ingredient in Novo Nordisk GLP-1 drugs that are already on the market. If I had to own one, it would be Eli Lilly. I don't own any Novo Nordisk. I do still think Americans are going to continue taking GLP-1s, but the question is, what's going to be the maintenance drug? Because after 52 weeks, you're pretty damn tired of poking yourself with a needle. You're pretty damn tired of storing that medication in your fridge. I don't know that to be true. I have to imagine. You can always find me online at Rob Black Show, Twitter Rob Black Show, YouTube Rob Black Show. I'm Rob Black, talking all things financial, money, investing, and more. Big event coming up, Lafayette Library, March 11th, Wednesday, 6:30 to 8:30. It's a wealth preservation retirement planning event. Sign up for it at robblackshow.com. It's robblackshow.com.
These days, retirement planning is more complicated than ever. So set aside Wednesday evening, March 11th, and get ready to learn some strategies for navigating wealth in uncertain times from Stephanie Richman, Rob Black, and Nathan Rogers. This event will focus on retirement income, tax strategies, estate planning, and tax planning. If you're at or near retirement with at least $500K in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves, Social Security strategies, and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. That's Wednesday, March 11th, 6:30 p.m. at the Lafayette Library in Lafayette. Space is limited, so sign up today at robblackshow.com. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.